We begin at 5:30 with our inflation tracker. The Federal Reserve has announced it is raising interest rates by 0.75%. Thanks for joining us. I'm Chelsea Jones.
I'm Mike Montecalvo. This marks the greatest rate increase in 28 years. Target 12 consumer investigator Sarah Granelli spoke with a financial advisor to learn what this means for you. Sarah?
Mike, Chelsea, although this is the biggest hike since 1994, the Fed says this type of hike won't be common. In an effort to combat inflation, the Federal Reserve announced Wednesday that they are raising interest rates 0.75%.
There's a supply-demand imbalance where right now we have a lot of demand for things that there's not a tremendous amount of supply. And so the natural economic response is for people to charge more for those things because they know the demand is there.
It's out of control.
Tom McDonald from East Providence says, like many, he's noticed how supply and demand is affecting everyday life.
I mean, I just had a tire replaced yesterday, and supply and demand, I paid like triple what I would normally pay for a tire.
Derek Amy is a partner at Strategic Point Investment Advisors. He says outrageous prices is something that the Fed is trying to get under control.
So the way that they can try to control inflation is to try to lower demand by making money more expensive. And so raising rates does historically take some of the pressure off inflation.
He tells 12 News for those looking to buy a house or refinance, this hike is going to make it more expensive. But the prices of homes are starting to come down, creating somewhat of a balance.
You know, we are starting to see price cuts, which is the first time in probably 2.5 years that people who are looking to sell their homes are starting to find that buyers are rebelling against the higher prices.
He says so far credit cards have not seen any rate change, and if you're shopping for a car, now is the time to ask for a deal.
Financed by the dealer, and so they're trying to incentivize you to buy cars. So there's still I'm still seeing 1% and 2% interest rates for new cars.
And experts are worried that if the Fed raises rates too fast, it could cause a recession. Last week, we spoke with an economist who predicts a recession could hit Rhode Island by mid next year. Sarah Granelli, 12 News.